The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 11th day of May. My pleasure to be here, Monday through Friday, Tiger Technicians Hour, 877-927-6648. Whew, what an interesting session. Dow was down 120 something, and now it's down only minus 96 at 20,844. S&P is at 2386, down 13. And this is going to be very interesting because you've got the comp index down 40 at 8,000. Ooh, that's kind of tough to see. 8,088. 6,088. What's really fascinating is the VIX is at 10.89. It's up 68. And we've seen this scenario before, and it's the outcome of the end of the day that's going to be important. Let me just show you that the E-mini has made a peak E/C. I'm thinking it's an E because the MACD is turning down. It's still positive. Stochastic's turning down at 84%. It's still positive. The on-bounds volume is horrible, and it's been that way for a while. And we've got a Chapman Wave 5 completion at 2403.75. Remember, I was discussing yesterday, I said we have not seen the close underneath the 9-period exponential moving average, which is now at 2387.60. We have not seen that since the breakout back on the 20th of April, the break above the 9-period exponential moving average, one of the important moving averages. But I'd also mention there are a whole bunch of factors, which I'll go in a moment. Let me just quickly say gold is up 6 at 12.25. Silver is up about 4 cents at, what is that, at 16.25. High-grade copper is at 2.5, up 1.70. No big deal. Crude oil, though, is at 40.03, up 70 cents. It's really trying its best to rally here. Bonds are unchanged at about 150 and 1930 seconds. And what's really interesting about this is that you've got the dollar down 0.04 at 99.51, still holding near the highs. Now, what's really important about what's going on here, there are three things. What I had said yesterday, there was one of the techniques, perhaps there's two, but one in particular, the techniques that I use to look at the E-mini was suggesting that the upside could be limited and the downside will start to open up. Just that's all it said. Didn't give numbers or anything. In the middle chart, so what you're looking at here is the daily. This is the E-mini. Why do you want to use it? Because it has trading almost 24 hours a day during the week. But what's really important is this leg E/B at 2403.75, a little above the 2397.25 March high, March 1st high, with a cup formation, completion, and now look at, I'm going to regret this, I know. Let me just go here. I think I've got a weekly. Is this a weekly chart? Let me just double check. Is that a weekly? Yeah, that's a weekly. Okay, great. Oh, it's got MRCY, Mercury Systems. Bob, there's a weekly chart. Bob, congratulations. You've really got the options. A good call on this. So I'm going to go to the ESM17, and I want to show you ESM17. And now I can use this chart here to show you something. I'm going to raise, that's the MACD, the moving average convergence divergence. Do you see the way that the MACD made its high on that candle right there? The candle of the 17th, a little underneath the previous high of 2 weeks before that, but at 2388.77. You see the way, I'm going to see if I can lift this up. Here it goes. I hate messing with these things because sometimes you can't get them back easily. Okay. Do you see that the stochastic was failing? And in that failing, the price went down and then held steady and then made a nominal new high, except that on the failure, the price didn't break down, and on the rally, the technicals didn't garner any upside momentum of substance. So the stochastic, the red line, the slow-moving average is at 82.04. When it was up at the highs, it was in the 96 area, 96%, 97. That is hugely positive. So as I'm putting this together, I'm saying there's a chance that we could deflect lower. But until the E-mini, this is the S&P June contract, can really start to trade in the 2368, about 20 points lower, 200 Dow points lower, I have to consider it's a process. So this takes me to something that I received, a couple of emails I received, but one in particular, which said basically, right here, wait to stick it out. I can't just be a whiner and have to congratulate great calls. So, great job sticking with your negative market bias over the past many weeks. Maybe there's a new chart formation you learn from this to use in future. So, that's like a backhanded compliment. I happen to take, I very rarely receive negative emails. I'm not sure if people just keep to themselves and mumble and grumble or whatever it is. But when I do, or even if it's just a critique, not a criticism, but a critique, I treat those as very valuable pieces of information. There are a couple of reasons why. Because that person might be articulating something that I had been thinking, and therefore it means that there's a validation that I was thinking correctly. I didn't plan correctly, but I was thinking correctly. So let me just answer this in a very simple way. Let me run through a couple of things. What I've been doing is we've been negative the Dow for a long time, since just after the March 1st high, and for a very good reason. And the reason is what I've shown every weekend on Saturday. I start sending my Monday charts out on Saturday and Sunday. And I said that this is something that might not be noticed, but I've noticed it, and that is every time the technicals, and I put in technicals in this middle chart, that's the weekly chart. I've expanded it here just to show you. What I'd said was, my observation is that every time we've started to see the stochastic turn down, you've seen a consolidation occurring in the Dow. And I call them the yellow rectangle formations. And it happened every single time, and I anticipated within 1 week of making the top of March the 1st that we were seeing exactly the same thing here, and I'd already made a yellow rectangle, smaller one, but I put in underneath here technicals. Every time I've done that, there's been a consolidation. Then I was articulating that the breakout after each one was concluded saw a V-shaped recovery in the stochastic, a very powerful move to the upside. But it was accompanied by the MACD turning up immediately or even earlier than that. And therefore what you got was every green candle that took you to the breakout, you can see that it was followed by a subsequent bunch of very strong green candles. We didn't get that here. And that said to me two things. One is that this one is stalling. This is different to the others, and that the pattern that I drew, that inverted Y formation, which is like the lowercase d upside down, is going to be the template that I need to look at. Then I'll talk to you about how the 120-minute chart is peak at 5, chapter wave 5, and how we pull back. I'll talk about that when we get to articulate those thoughts.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we're back. So in the context of the markets, the 120-minute chart made this Chapman Wave 5, which we recognize as a potential peak C minus coming up, gray C minus. And now we've plunged to the low today, which is at 20,798. 20,798 is below the previous Chapman Wave 5 at 20,847. So we had a little inside, 1, 2, 3, 4, boom, 5. And now I'm not 100% sure because we actually haven't made a peak yet. This could still be 1 to the downside. We could get 2 and then a 3 and a 4 and then a 5. But in the meantime, we've gone below key support. The stochastic is at 28%. Sorry, is that 28? Yep, 28%. I think it's going to go a little lower, and the MACD is still declining. So it says to me that lower lows and lower highs, at least for the Dow, and I've made a big point of this, that right now I've just gone to Merck. I had a question about Merck. Merck's acting very well. It's trading at 64.90. The reason why I'm mentioning it is because it's right in front of us. And the weekly chart I've renotated. This is in the up channel. It held the Chapman Wave inside track support. The reason why I also want to talk about it, it is part of the Dow. And that's this whole mixed rotational aspect. So let's keep going. So Merck is acting very well. I would just say this gap up on some kind of news, whatever it is. If it can hold at 64.90, if it can hold above 64 today and tomorrow, going into Monday's close, that'll be a big positive and say, you know what, in this rotation, and one of the reasons why I've called it a rotational correction and not a bear market or a bear phase, is that we're going separately, one by one. Now, let me say, that's Merck. Let me just go through this again. So now what we've got is, and I'm going to go through separately. Look, the Dow is in a leg C to the downside, having failed to go to a leg C on the upside. And that's a negative. It means that I have no choice but to consider that an arch formation, a news-related up spike, is fading because there isn't enough cogent energy. In other words, the earnings, etc., are just not helping at all. And I had a question about IBM. I'm going to put it all together into the package. Give me a second. Within this context, my thinking here is that there is a cup formation forming in the Dow, and we might have to come back to test the mid-20,000s quite soon. However, let's go through one thing at a time, because I want you to know how I'm thinking Otherwise, what's the point of listening to the program? Because you're just listening to numbers. I want you to know the thinking behind it. And what I said to subscribers yesterday, and I mentioned it, was that within the context of what we're looking at, the question is the NASDAQ telling us all-time high, followed by the semiconductors, followed by the OEX 100, followed by, what was it? There was one other that went to a recovery high. Or is it the Dow that's saying, no, this is more like the March. This has got not the same implications. I'm trying to point out that the ictus, the bottom, the beat at the downbeat is very often within days of one another when you get a major low. But when you're getting cyclical tops, they can unfold over a few months. Remember 2000 was the Dow January 14th, and then late March you got the SMHs and the semiconductors making the S&P and the semiconductors making the top. Well, that happens at tops because you have to rotate through the buying cycle of fund managers. Whereas at the bottom, there's an emotional throwing everything out. And right there is your major buy signal. We got that, the exact low, March the 6th of 2009, we bought the Dow, the diamonds, right at the low, and then the 9th was the S&P's low. So we've got to be careful because tops are made differently. So now what I'm looking at is there's a chance that Dow is making a cyclical, a rotational cyclical high, has made it on March the 1st. This is the 10th week. Give me a break. In a market like this, a powerful move, you take 10 weeks to make a new high. No, something's not right with that picture. GE is my clue. Look at GE down 11 cents a gain today. It's just saying, hey, if I'm your bellwether, you better stick with me because things are not so great. Now, I didn't have a chance to do this. I want to show it because, oh yeah, I did. Did I? Here's the 10-minute. So I'll just give you parameters. 23.84 right now. A close above 23.87 would say, aha, this is just part of that cyclical roll. Nothing's ready to really turn down out of the biggies, the semiconductors, etc. Otherwise, watch out, because if we go underneath 23.80 one more time, that's going to be a big negative. All right, out of the way. Let's get it. So now let's go on. So what I'm looking at is the S&P, the SPX, I think has made a peak E top, not an E slash. Well, either way, a D or an E, it's still some kind of a top. The MACD says A, B, C, D. We've made a D top, maybe a D, but the MACD is turning down. Stochastic at 90% is very strong, but it is turning down. And I'm watching the deflection here in the weekly chart of the MACD. That to me is imperative. That's part of the techniques I like to use in my CD, Introducing the Chapman Wave Methodology. I talk about that all the time. What happens on the right shoulder of that of the cup formation? All right. Well, wait a minute. What about the Qs? Qs have had their first big pullback. Even if it closes higher, it doesn't matter. It's still one of the biggest down candles we've had in quite a while. And since the low that was made back around about April the 17th or so, we've only had 1, 2, 3, 4, 5. This could be the 6th red candle. I mean, this is just a monster move. But on balance volume, watch out. My faster moving average says, watch out. The MACD says great action, but starting to turn down, watch out. The stochastic, 95% fantastic, but when the stochastic has finished its sideways move in the 95% area and starts to come down, that's when you've got to be careful. So for 95%, it's still holding well. All I'm saying is it touched the 9% or 9 moving average at 137. What was the low today? 137.38. And that's at 137.31 is the 9-period moving average. Is starting to show a little bit of a sign of some wear and tear. That's all I can say. Leg F in the weekly chart, that's what I'm calling it for now. Leg C in the monthly, nothing wrong there. And the peak D, alternate count D in the 120-minute chart says, yep, getting a little tired. So I wanted to show those, and I want you to now show you that the IWM, that's the Russell 2000, has failed at a peak D in the weekly. The daily is just really weird, a peak C minus. Gosh, I don't know when I last saw that at an all-time high. The OEX.X, or is it just now the OEX? Now it's the OEX. We used to trade this all the time. Now nobody even knows about it, but it's the OEX 100, S&P 100, made a peak E. Stochastic's coming down. It's at 86% good, but coming down. The MACD is turning down, hasn't crossed negative, and you've got the deflection starting in that weekly at a leg E, potential peak E. I think we're in for a rotational correction, and we're just waiting for the NQs, the QQQ series, NDX 100, to actually give some confirmation, at least of a daily sell signal, even if it's not a sell mode. So I thought I'd get that out the way. So the next question I had was, Paul wanted to know about IBM. And what does Paul say? He says, Paul, can you take a look at IBM on your show today? It looks incredibly washed out, hitting numerous supports. Also, you seem to be amazed at how low the VIX is trading. No, I've not been amazed at all. Other people have been amazed. I'm just saying it's back to where it's been, where certain turns on the upside on the VIX volatility index have occurred. That's what I'm saying. It's trading that low because the market is loaded with fraud. Right now, the new FBI director could open all this fraud out. Well, I'm not so sure about that.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I remember at a wedding about 2 years ago back on the, where is the military thing in New York State, off along the Hudson River? Anyway, somewhere along the Hudson River, near Hudson, in fact, New York. I met someone who worked for IBM. He had been there for a long time. And I said to him, what is going on with IBM? He said, IBM is like a super tanker. It wasn't quite the expression he used, but he was thinking on those lines. He said, we are working on cloud. We are working on stuff that will only come together later on. He said, we're just not in the game right now. There's a company that's been around for a long time and really looks out for the long term. And I said, well, the stock doesn't seem to be doing all that well. Well, subsequent to that, it had a fabulous run from 120 to 180. And now it's at 150. And I just have to tell you, I think IBM is still old thinking. It hasn't gone into the new thinking yet. I mean, West Point, thank you. And now look at Microsoft. They've got something. I know that when I had to get my wife a new computer recently. And here we are looking at these different things. And then when it comes to finalizing everything, it turns out you can buy Microsoft, all those things that you want, PowerPoint, etc., a one-time fee with no just occasional updates, or you can get an annual fee and get all the updates all the time. Well, I mean, for what we needed, you just needed it once. But they seem to have locked in. They always seem to lock in so that you keep paying and paying and paying. And I think that's why Microsoft's almost at all-time highs. And IBM just doesn't have that. Whatever they're doing, they're not doing it right. So, Paul, IBM might be making testing lows. I just don't see it as a viable entity at this point. I think it will be. I'd stay away for now. Let it have a rally and then come back, and then we'll see whether it does anything. And so now that was it. Next question I had was RX, OREX. Trading at $3.23. This is not for the faint of heart. So Sandy wants to know, could you give me an assessment of where you think RX is headed? I own at a higher cost, but would like to buy more. Thanks much, Sandy. See, Sandy, that's a very different thing altogether. If you own a higher, but you really like the company and you're trying to position yourself for the longer term, that's way different to saying, "Oh my God, I've got in now, and now it's pulling back, and I'm gonna cost average. I'm gonna buy." That's very different. This is your actual plan. And if this is your plan at 322 right now, somewhere in this candle, yesterday's candle had a low of 282 and a high of 333. I'd do another little bit of buying. If you can, have patience, but I think you're going to get another chance between $3.10 and $2.95. That is just part of the process. That's all I'm saying. I would prefer that you didn't get a second chance to buy it lower down, that it was actually making higher highs and higher lows instead of the sideways pattern that says, whoops, now I'm starting to make lower lows and lower highs. But that's where I would look at it again and just send me an email when it gets there. Don't buy it until you send me an email, or just say, hey, that's part of my plan. That's the area I was thinking of as well. But I'm a little cautious on this because it has a way of spiraling higher and then just dead stopping and then coming down, and that's what we've got to be careful of right now. So yes, RX, which is called Orexigen Therapeutics, one of those biopharmas, something could be happening, and if you're buying it for that reason, then that's the level that I'd be looking at. Next thing I wanted to do was a Macy's, Nike. So Macy's right now, UGG. Down 13% at 25.30, down 4. It is made a peak way back in 2016 at about 45. It's trading now at 25 in leg E to the downside. I think Macy's is going to have to. Oh my! There's that uppercase A. Made a peak F top in the Chapman wave and walk in the 9-period moving average. Now, only 1 month since it broke down in 2015, August, has it closed above the 9-period moving average. Oh, I would be really careful. So, Bob, yeah, be careful with this. Macy's might have to cut. They're going to make an announcement, I'm sure, very soon saying we're cutting whatever it is. And that's a shame. Macy's was really a very good store. What can I say? That's how it is in business, right? They've had their time in the sun. Yeah, just be careful. It doesn't look good. RTH, that was the question really. Retail index, it's gone to a leg D, peak D if there's no new high today. This is a fabulous move to the upside, but it's based on, you remember we spoke about it the other day. I said, hey, I'm quite surprised. We're looking at Costco. Trying to think, was it Walmart? Let's just look at them. So Costco, COST. Costco is at this point, Yeah, it's had a very good move. Did it have a split or something or other because the letters are all far away? So it went to a peak E right there. Now it's pulling back. Costco's consolidating. Leg E in the week, in the daily, leg D in the week, probably a peak D at the end of the week. Yes, and a leg D in the monthly. All right, what was the other one? Was Target doing anything? Let's see. Yeah, Target was doing something, went to A, B, C, D, E, and has gone to an F right there. Now it's pulling back, but the monthly chart looks terrible. Macy's and Target, oh my. What can I say? The XRTs was a different instrument, you remember? XRT is much more specific. It's gone to a peak D, E. I'm calling this an F for now. In the daily, peak F, and a B in the weekly. XRT is very different. It's the spider retail, and it has a different kettle of fish. Has different instruments. The one I'd look at is the RTH. It's much broader, and it's actually acting quite well. It is confirming that there's been a rotational correction because some of the stocks within it are terrible and some of them are really strong. The big ones are strong. So I hope that helps you. Next question I had, if I can just find it here, was, where did it go? Oh, so it says, Gigi says, put buying on the Qs for 16 of June, expiration, 135, 129, put spread, 18609. What is that? 0.92, 0.30. Oh, okay. So he says that there's a favorability just on the shorter term for a pullback. Yep, that's what I'm kind of thinking. It might be slow because, things that have been working, fund managers want to keep coming back. Look at this. Here's the 2-minute chart. It's gone to leg D. Very nice. It went all the way down to, E-mini went down to 23.79 round number, trading right now 23.85. That's 6 points. That's pretty good under these conditions. So it's a process. So let me go back to the statement I made earlier, and that is, in this rotational correction, my thinking is that you've got, how can I put this? I want to put this succinctly. It's been 10 weeks for the Dow. Hasn't made a new high. It's been 10 weeks for the S&P. The very beginning of the week, it just squeaked to a new high, but how it holds is going to be very important. And in this time, this week, you've got a brand new all-time high in the QQQ series, the Index 100. That is really good action, but sometimes we see that the Qs are belated in their making their top as the others have already started the consolidation. I think this is traditionally unfolding. Dow, S&P, Qs. We'll be watching closely. I'll be right back. Basil Chapman, Dow's down 84, S&P's down 12. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, we're back, and the Dow's down 86, S&P's down 12. I just want to show a couple of things. I was doing some work on the oil and SCO, which is the inversion, and this is the ProShares Ultra Short Bloomberg crude. Made a beautiful left side, right side price time match, and then broke above it in the high of 22nd of March at 42.51, comes down X number of bars, does exactly the same thing right to the day and breaks out above it. With that's the fulcrum, that's the plumb line, the midpoint. I love it when it's mathematically perfect. Breaks to the upside in a peak F/C. I'm calling it an F because it didn't take out the low that started the whole move up from way back in the 3rd of January at 30.12. This is all the same thing, all the same move. I'm a little cautious about getting back into for the person asking me when to get back in the SCO. I just say, look, the USO, which is the United States Oil Fund, made the exact opposite, an inverted V-shaped pattern exactly to the day. That was right there. You can see that day right there on the 4th of May was where there should have been a price test of the low of 9.88, and bam, it just breaks down and it goes under it, it closes under it, being under it, it says that any rally should fail and do a retest. And I'm just saying that if the USO, which is the oil fund itself, does a retest, if it breaks to the upside 10.01, if it breaks above that candle right there of the 28th of 1033, I have to consider that now it's got a rally to the upside. So I'm just going to say, for me, on the SCO, I just have to hold off a little bit. If the USO closes in the next 2 days under 975, SCO is back in play again. That's the only way I can look at it. I hope that helps you. I don't think it helps you because I just told you what you probably know. Okay, so we've got another question here. Roy wanted to know, is GBTC going to pull back? Well, I featured this for a little while now, for about less than a week, the GBTC's Bitcoin. And I featured it this morning. And this is what I said. This is very interesting. So let me go to it right here. Yesterday, I showed this chart as a leg F. I said, if anyone is long, I'd be recommending that you raise your stop if it breaks above the high. I had said, actually, the closed at 233, but the high was 234. I said, if it goes to 238, I think I said 238, raise the stop immediately to 228. But my thinking is that this is going to be a leg F, and you've got to be careful because you can come down just as quickly as you went up. In Bitcoin, trading at 213.70 right now, down 6.30. And my recommendation was based on the 120-minute chart peak D. Today, I did the same thing. Let me see if I can find it now. Bitcoin. I think this is at Bitcoin. There it is. So Bitcoin, this is what I said today. There is now a really high probability that GBTC, Bitcoin Investment Trust, could start a consolidation toward the 9 EMA at 186. If this is a daily peak F and weekly peak E, we will only know by next week if no new high this week. Then leg D in the monthly is in question as a potential top. We will see. So far, the gain has been extraordinary. Now, what for this alternate currency? It should try for 300s later this year, but on a short-term basis, my thinking was, based on that candle, that there was going to be a pullback. Now what we've got is it's down 6, no big deal, but I think we've started the consolidation. And the consolidation says the gap that was made from yesterday's low of 210, if we start to trade at 208, be real careful, because that 198, 192 area, especially 192 9-period moving average, becomes a target. So Roy, I'm just going to say to you, yes, it's going to pull back. In my work, because it could now have a couple of flurries to the upside. I don't think it's going to take out 265, the round number high of the 10th. So of yesterday, what I am going to say is, if you've got real nice profits, what I discussed yesterday, in fact, I discussed it on the show. I said I'd be taking quite a bit of money off. If you want to keep your call because you got it down way in the 140s or whatever it is, fine, I have no problem. Keep a little bit because it's in play, and I think it's going much higher later this year. But you might have to watch for some real whippy action, so be careful. That's what I'm saying. I believe it's going to come into that gap. There's even a chance that it fills in the gap at a certain point, not immediately, but the gap from the low of the 8th of 188.70. So just be careful. It's still in play. The MACD hasn't turned down yet. Stochastic still at 85%. On balance volume says just be real careful. All right? That's my recommendation. You're the one that got in, so you're the boss. I'm just saying, hey, if you want my opinion, that's my opinion. Okay. Now, the next thing was, so the left side, right side price time match we saw was exactly the same pattern that we got in cyber, which is cybersecurity. This is CyberArk software. Look at this beautiful pattern right here. It went to an E. Right in exactly today is the time that it should have tested the high of peak F, and it's gone to an E. So I love this kind of pattern. This is the cup formation. In my CD Chapman Wave methodology, I discuss this pattern a lot. I go right into it. I even talk about the Chapman Wave inside wedge target repellent line. Let me just show you something right here. See that line? Look at that. That's Chapman Wave target repellent line. Okay. And in fact, I had it down today. If I can get to the 10-minute, I think I have it in the 10-minute chart. Chapman Wave, was it the NQ? I'm not sure. Let me just have a look. Yeah, there's a Chapman Wave inside wedge target support line. We aren't there yet, but that line, we went real close. That line would have been at 56.30 and in NQ 10-minute chart, and you went to 56.36. Pretty darn good, because we were way at 56.68 earlier. Okay, that's a technique that I've developed over the years. There, it goes all the way from there. Look. Okay. Now we have a couple of questions. Check out Rick. Oh, there was another Rick. Is there Rick a person or Rick the stock? Oh, Rick. Whoa, look at that. Rick is RCI Hospitality Holdings. Oh, man. So this is ABC. This is a huge leg D to the upside daily, trading at 19.32 RIC. The monthly chart, I can't do it so quickly, but the monthly chart, yeah, AB, this is a leg C, 1799, 70, 18. Oh, this is a leg D. So, yeah, if I'm correct. Let me just, you always have to move to the left. Yep, that's what it is. A, B, C. Yeah, I'm calling this a leg D and the monthly. And, yeah, it's acting fantastic. And what it's saying is, I'm in play in this environment. I'm what's working. So let's keep that in mind. I'm going to have to write that down because I'm liable to forget. Let me write it down here. Rick. Good. Okay, there was a question I had. Oh, about the VIX index. Here we are. So the VIX index, you see the way the buying keeps coming in, that's because fund managers are saying, hey, this is working. We're going to just keep buying, and they want to keep buying. But the VIX right now is at 10.90, up 69. I'd say to subscribers, we're actually long the VIX, I'd say to subscribers that in the 11s is really what you want to see. Holding in the 11s. Anything else is just a bounce. I'll be back about the Chapman last segment coming up. Tiger Technicians Hour. About that night.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back. I was looking at sugar. You remember sugar? Last night I found an iPath Bloomberg Sugar Trust ETN. That's not an ETF, it's ETN, it's just paper. Great move up off the low in a leg A, with a MACD good and a stochastic holding quite nicely. There was the 1-to-1 from that peak E top and October, the week of the 7th, at 53.66. Down to the low of October the 16th, week of the 16th at 39.45. Bounces back. So this is your A to B equals C to D. This is the traditional lightning rod, but it's a different thing. I use it as it's a parallel price 1-to-1 match. What do I mean? I mean the angle that it comes down. This angle is actually pretty steep. I don't know what the angle is. It's about like a 28-degree angle down. Maybe even sharper, is exactly the angle that it took to come down from that high, the peak C minus, week of the 10th of Feb. And now we're in the area where the stochastic's flattening out, the MACD's improving a tad, in the weekly, the daily's already improved quite a bit. So I'm going to be watching this because although there's not much volume in the, there's enough volume, but it's not all that much. In the ETN, the iPath Bloomberg Sugar ETN, it's trading at 33.93.60. I'm watching it. I'm watching it because it's really important. If it doesn't rally from here, this arch formation in the weekly, in the monthly, says, uh-oh, at 33, you break 32 support, I'm going even lower. So that makes this very important to watch. All right, got that out the way. Now, I will be back with Tom O'Brien later this afternoon for an interview. But in the meantime, let me just say, this is what I'm looking at. The volatility index, yes, it's bounced. It's done that before. There's a little bit of a difference here. Now, my contention is that this is a rolling correction with the waves not knowing that the correction's underway because there are just momentary moves to the upside. The S&P fractionally went to a new high, all-time high in that weekly chart to make the cup formation. The QQQ, that NDX 100, still acting really well, even though today certainly there's a pullback that is one of the deeper pullbacks so far. I'm thinking that it's going to be slow. It might take a few days, chop, chop, chop. But until the Qs close under 136.50, they're at 137.66. So it's over a point lower. It's already a point, minus 74 cents today. No big deal. But I want to see this candle, this doji candle, not broken, the high not broken all of next week. 138.63, sacrosanct. You break that, I have to think something else. But in the meantime, there's a potential leg F. One by one, the indices are starting to rotate to break down technically, and we'll see a break to the upside. I say it again, 139.80 to 140.30 in the QQQs, that I just have to scratch my head and say no. I think the Qs are going to drag the Dow higher and the other indices. I don't think that's possible right now. I think there's a problem. And the SMHs right here, coming back, it's only down 13 cents. We're going to be watching this real closely. Back to the VIX index as we wrap up. What I wanted to say is the VIX index at 10.89. If the VIX closes towards the high of the day, 1123, or higher than 1123, and the Dow closes down triple digits and the S&P closes down 16 or more, 17, 18, something like that, that would be, for me, the start of the breakdown that I've been looking at. And then the Qs have to be closing much, much lower. If we rally back again, it says chop, 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 it's a process. Process is still ongoing. And that's all I can say. I'm just doing the best I can and trying to do the analysis in relation to what I know has worked before. So, Basil Chapman signing off. I hope you have a great day. Check out my opening call, and I will be back to Tom a little later this afternoon. Otherwise, see you tomorrow, Friday. I will be doing Larry's show at 9 o'clock tomorrow morning. Thanks a bit.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,